is prepared to recognize the Palestinian state. The comments echo those of British Foreign Secretary Yvette Cooper. She warned of serious consequences.
If we don't act now, the risk is that everyone will just turn their backs on the two-stage solution that is the only lasting way to get peace and security for the region. That is why it's so important.
Recapping the top story this hour, the World Health Organization African region says it's ramping up vaccination efforts to curb the spread of the Ebola virus in the Democratic Republic of Congo. For any news stories you would like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +27 11714 4459. For Channel Africa News, I'm Jolani Tulo-Wepe.
SABC News. The African perspective.
Now, sports headline, Kenyan athletes are expected to earn significant prize money from their Tokyo performance. Adidas is on to replace Le Coq Sportif as Bafana Bafana and Banyana Banyana kit sponsors. I'll be back with these and other stories at the bottom of the hour.
Connecting Africa to the world. Africa in Business with Tami Ngubeni brings you the latest insights on Africa's economy.
It has gone exactly 7 minutes after 4 p.m. Central African time. Welcome to the Monday edition of Africa in Business. We'll be looking at a number of stories today, including some that I've actually already spoken about with the team. The Standard Bank Group is hosting the South African state-owned companies, those are SOCs, at an investment collaboration summit in Dubai. We'll be speaking to an executive head of infrastructure and public sector at Standard Bank on why this destination and what they hope to achieve, as well as the importance of public-private partnerships, which really is the way that government in South Africa has been going and business being very open to that. But why specifically Dubai for this particular trip? Also look at the Democratic Republic of Congo. They will soon be lifting a ban on cobalt, which they'd implemented in February of 2025. How are the rates in the DRC looking at the moment as far as cobalt exports are concerned? Did they achieve their goal of helping to push up the prices of cobalt, which at the time were very low? Also a look at the G20 Agricultural Working Group and Food Security Task Force. They've adopted a declaration that focuses on African philosophy, and I'm talking about Ubuntu, which is the spirit of cooperation, of unity, of dignity, as far as ensuring food security for the African continent. We'll be speaking this afternoon to the Deputy Director General of Economic Development, Trade and Marketing, Gwena Komape. That and a whole lot more coming up for you this afternoon on Africa in Business.
Africa in Business on Channel Africa.
Now, a milestone for global energy markets. Nigeria's massive Dangote refinery has exported its first shipment of gasoline to the United States. The delivery, which is handled by commodities giant Vitol and U.S. distributor Sunoco, marks a new chapter in Africa's role as an emerging fuel exporter. The tanker Gemini Pearl transported about 320,000 barrels of gasoline to Sunoco's terminal in Linden, New Jersey. But the question we ask is, how significant is the Dangote refinery's first U.S.-bound gasoline shipment for Nigeria's economic stability? Channel Africa's economics reporter Innocent Samosa takes a look.
The $19 billion Dangote refinery, after years of delays, is now drastically altering energy dynamics. Oil and gas analyst Collins Nekwe says this will drastically reduce Nigeria's dependence on imported fuel, a major drain on foreign exchange, while positioning the country as a key exporter to European and American markets.
There was a time when we had to deal with the question of whether oil is a dead commodity in Nigeria. Well, I recall that, our consistent response has always been that oil might be a dying commodity in other parts of the world. Certainly in Nigeria, it is not a dead commodity. It is a commodity that supports many sectors of the economy. And so Bringing it home in specific terms to the Dangote refinery's first US-bound gasoline shipment, I would say that it is more than symbolic. It is actually extremely strategic.
With the world shifting to renewables, how can Nigeria ensure the Dangote refinery remains economically sustainable? Nekwe explains.
Long-term sustainability is key here. Today's milestone is historic, but tomorrow's reality is a green economy for Nigeria. There are no two ways around this. Now, if you view this development side by side other energy market developments in Nigeria, take for instance the return of Brazil's state oil company Petrobras. An MOU was signed recently by the two heads of states, which is positioned to be injecting fresh capital, new skills, and more impetus into the Nigerian market.
Meanwhile, Dr. Victoria Nalule, CEO of Nalule Energy, says with Nigeria now exporting refined products to advanced markets like the US, the move elevates Africa's position in global energy value chains.
The Dangote refinery's first gasoline export to the US marks a major milestone for not only Nigeria but also for Africa at large, especially in the energy sector. The first major benefit for the country is foreign exchange relief, because by reducing reliance on imported fuels and earning foreign exchange from exports, Nigeria eases pressure on its currency and improves its trade balance. The other benefit is with respect to boosting trade revenue, because exporting higher value refined products increases revenue per barrel compared to crude oil, strengthening public finance and enabling more domestic revenue.
She says this will help to address the energy poverty in the continent.
But when it comes to Africa at large, this milestone signals Africa's regional energy security, because with exporting the first gasoline export to the US, this signals that Africa can be able to secure its energy security regionally. Nigeria will be able to not only supply to other countries outside Africa, but it can also supply to neighboring countries, implying that we are able to finally address the issue of energy security, or to even start to address the issue of energy security, especially given the energy access and energy poverty challenges that we've been experiencing in Africa.
For Channel Africa News, I'm Innocent Simosa in Johannesburg.
Africa in Business on Channel Africa.
It is now 14 minutes after 4 p.m. Central African time as we take you to the Democratic Republic of Congo. Now, the DRC says it will now lift its ban on cobalt exports from the 16th of October. However, it does intend to manage global supply by imposing annual export quotas. You will remember that the DRC initially implemented a 3-month export ban on cobalt. This was earlier this year in the month of February. They did this in an effort to push up the low cobalt prices, which surged in response. The country's authority for the regulation and control of strategic mineral substances markets says with the planned quotas, miners will be allowed to ship up to 18,125 tons of cobalt for the rest of 2025, with annual caps of 96,600 tons in 2026 as well as 2027. For more on this, we joined on the line by Peter Major, the Director of Mining at Modern Corporate Solutions. A very good afternoon to you. Welcome to Africa in Business. Good to have you with us.
Thank you, Tommy. Thank you very much.
So let's take a look at this move to replace a ban on cobalt exports with quotas. What impact will this have on global cobalt prices?
Look, there's always a delayed reaction, because if you look at when the ban officially took place, the first in the 3 months into this year, the price continued to fall. So if we look at exactly 2 years from today, the price of cobalt was around $33,000 a ton. Well, it kept on falling until about July, August. Yeah, I'd say until about July this year, June, July. It fell from 33,000 to 23,000, maybe even a little lower. So it's like the ban didn't have any effect because the prices were continuing down. But now the price is already back to 33,000. So maybe it was a delayed reaction of the ban, but maybe it was also peace negotiations with Rwanda and the M23 rebels. Because when you first put the ban on, you just drive the sales illegally. You know, the mining continues, and maybe the big producers, they're easier to keep in line than the multitude of small producers. Kind of like in South Africa. We might be producing officially 100 tons a year, but we're probably producing another 50 to 75 tons illegally. Now, that doesn't slow down just because of proclamations by the government. But I think this is a worthwhile exercise by the DRC because they control 70% of the world's cobalt, kind of like China with rare earths. When you control such a large percentage, it makes sense that you have literal control of the production and of the sales, you know, to try and keep it from this volatile, crazy pricing that cobalt is famous for.
So let's look at this, Peter, and ask, was the imposition of this suspension successful? Can one categorically say that the incline in prices was directly related to this, or are there other factors that might have played into the change in prices?
Yeah, there are other factors, but I think the ban had the biggest effect because that did stop exports from the large producers. And the large producers are probably responsible for at least 70% of the 96,000 tons that Congo produces. So it did have an effect. It took a few months to kick in. And I think it's going to work going forward. It's definitely going to help stabilize prices because these cobalt prices, every 3 or 4 years, they fall as low as 20,000 a ton. Then they shoot up for a year or two as high as 90,000 a ton. And, you know, at 90,000 a ton, it just brings in more and more production. You want to stabilize it somewhere around 40 or 50, and you want to try and manage the production so you can keep those sort of margins.
Now, the extension on the ban on exports saw the likes of Glencore and China's CMOC group declare force majeure. How might this shift affect the competitive positions of these other major cobalt producers?
Yeah, good question. I don't have a great answer. The Chinese would like to export as much as possible, and that helps keep the price as low as possible. Glencore, they would like to export nearly as much as possible, but they want to do it at a better price. They want to get a decent profit margin that allows them to get a return on investment and to spend capital improving their operations and maybe expanding. So Glencore is much more profit-oriented, free market-oriented. Well, the Chinese are probably ultimate free market. They just want to produce as much as possible, as cheap as possible. And it's more for the good of the country, China, than it is for the producer.
So if we look at international buyers, how might they respond to the quota system? And I'm talking now in terms of sourcing.
Look, most of the buyers are probably indirectly middlemen. And they only make money buying and selling. They might make a little less if the price of cobalt is low. They might make more if the price of cobalt is high. But they're like stockbrokers. They make money by the turnaround, by the volume. So when you got a ban and they're no longer allowed to even trade, then they're going to starve to death, or they're going to get used to eating rations. So, yeah, the traders were greatly affected by this. The producers, yeah, them too, the official producers, because now they've got all this working capital tied up. But the illicits, because the DRC has so many illicits, the ban's only partially effective, and it affects the legitimate, transparent, large producers more than it does the non-transparent, opaque, small producers that are already using middlemen. The big guy gets affected the most.
And we see that in other industries as well. There'll always be an illicit market, but any attempts to try and regulate it at this level does ultimately affect those who are trading legitimately. But we thank you very much for your insight, Peter, as we break down this latest development. Thank you for your time.
Okay, Tommy. Thank you for having me.
Thank you. It's been a pleasure. That was Peter Major. He's the Director of Mining at Modern Corporate Solutions. So there you have it, DRC lifting the ban from October the 16th, but putting other regulations in place to try and monitor the value of cobalt and the price of exports for cobalt. For the rest of 2025, there are going to be miners will be allowed to ship up to 18,185 tons of cobalt, and with caps of 96,600 tons. And those are going to be implementable for the next 2 years. That's 2026 and 2027. It's gone 22 minutes after 4 p.m.
Get Channel Africa on DSTV Audio Bouquet. Channel 802. Are you fluent in French, Chinyanja, Portuguese, and Kiswahili? Are you passionate about radio? And are you looking to work in South Africa? Do you have papers that qualify you to work in South Africa? In that case, we might have an opportunity for you to work for Channel Africa. Send us your CV and demo at newsroom@channelafrica.co.za. Remember, if you don't hear from us within 14 days, it means you have not made it or you have not been selected. Channel Africa, the African perspective. Stay ahead with Africa in Business, where Tamengo Beni unpacks your go-to source for Africa's economic trends and development.
It is 23 minutes after 4 p.m. Central African time. A lot of activity taking place around the G20, as we know, with various task forces meeting. And we're going to focus this afternoon specifically on the Agricultural Working Group and the Food Security Task Force of the G20. They've now adopted a Food Security Task Force declaration that is centered on the African philosophy of Ubuntu. South Africa's Minister of Agriculture, John Steenhuisen, says the G20 ministers have recognized that food security hinges on interdependence, on dignity, agency and solidarity. Steenhuisen says the ministerial declaration affirms and reaffirms the G20 members' commitments to multilateralism and the 2030 Agenda for Sustainable Development, which also recognizes that the right to food is a fundamental basic human right. To help us unpack the G20 Food Security Task Force declaration further, we're joined on the line by the Deputy Director General of Economic Development, Trade and Marketing, Gwena Komape. A very good afternoon to you. Good to have you with us on Africa in Business.
Good afternoon, ma'am, and thank you very much for inviting me to your program this afternoon.
Very refreshing, I might say, when you look at developments coming out of the G20, especially when they are being housed and conducted on the African continent, to actually have the type of solutions that speak directly to us as a people, with the values and lingo that really resonate with us. But perhaps if you could give us a bit of an overview of this G20 Food Security Task Force declaration and how it ties in with the philosophy of Ubuntu.
Thank you very much, Ngubeni, and good afternoon to your listeners. Remember, we have concluded on our G20 on Friday last week on the 19th with the Food Security Task Force, which was, before that, we had the meeting of the Ministers of Agriculture concluding the Agriculture Working Group work. Unfortunately, we couldn't, with the Agriculture Working Group work, reach a consensus with two of the members rightly indicating that they do not agree to some of the terms that we were using, unfortunately, which are very much crucial to food security intertwined with agriculture, which is climate change. And those members are the United States of America together with Argentina. Fortunately, when it comes to the agriculture, to the Food Security Task Force, there was an overwhelming agreement among the members with regards to the studies that we have commissioned to look at the food price volatility, the high food price volatility, the occurrence of the cyclical movement that comes with the prices of food. And in there, we called those principles, we've got 11 of them, we called them Ubuntu principles, simply because we, as the South African presidency, are of the view that if one of us is hungry, remains hungry, they are not able to access food, nutritious food, then we are not doing good to humanity. Those 11 principles, all in all, they are talking to building on the resilient food systems. That is, when we talk about the food systems, we're talking about the production of food, from where food is produced at the production stage until it reaches our table and the disposal of it. That is production, processing, transportation, and all the other activities that are undertaken to ensure that we have a safe food on our table.
As far as small-scale farmers are concerned, some were identified as being key in addressing food security. How will they be supported?
You know, when it comes to the support of small-scale farmers, indeed, they are important. They play a crucial role in food security. And we do have, as a country ourselves, we do have the agro-processing and agriculture and agro-processing master plan, which is a social compact between government, the social partners, together with business. And we have realized as governments during the G20 that we on our own cannot do it. We cannot be able to support the smallholder farmers or all kinds of farmers on our own. Hence the importance of bringing private sector into the equation to ensure that we are able to grow the cake. And what is important again is that we should notice that climate change, we have to work with it. We should be planning for the changing as the weather patterns change. They have already changed. We can see now in some areas where we were supposed to have started already with the planting of maize, September, we haven't had rains, and the weather pattern, the weather patterns are changing. So the support mainly, we do have the instruments as South Africa that we use to support smallholder farmers. There's quite a number of them. And what is important is to ensure that we bring business into the equation such that after the production of food, farmers are able to access markets. Hence, we are looking at international markets and local markets for our farmers.
DDG, as we wrap up, and really quickly, if you would, you did allude to this earlier on in our conversation around the impasse between the other members and US and Argentina, and you mentioned an issue of terms that were used that were not agreeable to all of the partners, and also you mentioned that this was around climate change and the controversy. Could you let us into your confidence exactly what that was about, especially because you mentioned just the importance of how climate change is affecting food production and how then this is going to impact the various food security strategies that are going to be put in place to ensure that there is indeed global food security in the midst of climate change?
You know, Tammy, the main impasse with the two members who were not in agreement it's simply the use of the word climate change, which they, if you have noticed, the US has pulled out of the Paris. It's pulling out of all those agreements, the Paris agreements, and all, and they do not want to see the word climate change. But as a South African presidency, we were very clear, and we are very clear, together with the other parties that were in the room, that we cannot mention food security without mentioning the impacts of climate change. Agriculture and climate change, they have that relationship. We know we do contribute to climate change through fertilizers in some instances that we're using, and at the same time we also, through the plants that we plant, are able to sequestrate some of the carbon dioxide that is in the atmosphere. So mainly those are it's just a matter of the terms.
All right.
They do understand perhaps, but they didn't want to see the term climate change on the document.
And it actually is a very important area where consensus has to be reached if there is going to be any progress, or at least an acknowledgement that there is such a phenomenon. But we're going to have to leave it at that this afternoon. DDG, thank you so much for putting us in the know.
Thank you very much, Mme.
Thank you, ma'am.
Goodbye.
That's have a good one. That's Deputy Director General of Economic Development, Trade and Marketing, Gwena Komape. A very interesting, turn of events there as far as US and Argentina are concerned, and just the importance of being able to call a spade, or at least acknowledge the factors that are common to the entire globe and how those are going to impact food security and the strategies that are going to be implemented moving forward. I wonder if you've got any thoughts on that, especially because South Africa will be handing over the G20 presidency to the United States come November. Do let us know. You'll find us on X, Instagram and YouTube at Channel Africa 1 is where we're at. It's gone exactly 4:33. Apologies to our marketing desk. I know they've been eagerly standing by to give you the latest market indicators. So over now to Tabiso Lehoko.
Business news on Channel Africa. The African perspective.
Tami, and good afternoon. In South Africa, the dollar will cost you 17 Rand 31. In Botswana, it's at 13 Pula 11 Namibia, 17 Namibian dollars 31. And in Zambia, it's at 23 Kwacha 61 to the dollar. In Kenya, the dollar will cost you 128 shillings 6.31. Ethiopia, 143 birr 496. Uganda, 2,000 shilling 483. And in Tanzania, the dollar will cost you 2,000 shilling 462. $1 in Nigeria is trading at 1,492 naira. In Egypt, it's at 48 Egyptian pound 111. Tunisia, 2 dinar 8.99, and in Algeria, it's at 129 dinar 66. The Moroccan dirham is at 8882 to the dollar. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is at 2,751 to the US dollar. Commodities markets: gold is trading at $3,721 and platinum $1,407 per ounce. Brent crude oil is at $65.99 a barrel. For any business stories you would like to share with us, please send us an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. For Channel Africa Business in Johannesburg, I'm Tabiso Lohoko.
Business news on Channel Africa. The African perspective.
And for the business of sport, here's Figile Lingwate.
Sports on Channel Africa. The African perspective.
Good afternoon, Tammy. We begin with the athletics. Kenyan athletes are expected to earn significant prize money from their performances at the World Athletics Championships in Tokyo, in Japan. The first prize winner will be receiving $70,000, the second place $35,000, and the third place $22,000. That's according to the prize money structure for the event. These individual event earnings are separate from the separate government-funded reward scheme for medalists at the Olympics and Commonwealth Games, which has recently been enhanced. Kenya government reward scheme for Olympic and Commonwealth Games is gold, $23,000, increased from $6,000. Silver medal, $15,000, increased from $4,000, and bronze medal, $8,000, increased from $3,000. And South African teenage sensation and the emerging talent Nathan Bredenkamp has been invited to stay in Portugal for a year. Bredenkamp was once selected to be part of the Football Institute under-15 team which competed in the Uber Cup. Bredenkamp is expected to raise $29,000 for his stay in Portugal while pursuing his career. Nathan's mother, Kilebukhile Bredenkamp, elaborates on what is needed for the trip.
The reason that we here is because we want to actually just voice it out there that we are in a financial strain and we need help from the community to assist us to make Nathan's dream come through. This invitation came actually at the right time, but little time for us to actually raise funds because it has to happen in January and we only received the letter last week, and which we are actually so excited about because that's the thing that Nathan has inspired to actually go and play abroad.
Nathan's mother, Kilebukhile Bredenkamp, explains what is the money for and how much in total is needed.
We're looking at plus minus 480,000 for the whole year because this includes his registration, which is once off, and his year 10 months of schooling and football there, which is about 348,000. It's 1,700 euros. So I think the reason there that it sounds so expensive because they're charging us in euros and we are in rands, and as you know our rands are a bit weak. So yeah, and then the language as well that he needs to do as an additional, it's another 1,200 euros that he needs to. It's about 34,000 rand that we need to pay as well for him to learn Portugal.
SABC Sport can reveal that the world's leading sports apparel company Adidas are front runners to replace Lecoq Sportif as Bafana Bafana and Banyana technical sponsors. Without giving anything away, South African Football Association SAFA CEO Lydia Muteba revealed that the name of their new kit sponsor will soon be presented to the organization's National Executive Committee for endorsement. And the SABC Sport has previously reported that Adidas were up against Nike and Puma, Macron and Gapa in the fight to be the new SAFA technical sponsor. Lecoq Sportif's contract with SAFA expires on the 31st of December this year, and the new sponsor's contract will start from the 1st of January next year. Adidas, who are believed to have impressed with their presentation, were SAFA kit sponsors from 1998 to 2011. Michael Kim claimed his first DP World Tour title at the 2025 Open de France. Kim Tour round golf the Saint Normala Brentech in Paris Cardinal and cutting a final round 65 to finish on 16 under. Min was there with golf recruit Bruce Koepka, Min Woon Lee and Marcus the Bullet Armitage also finished inside the top 10. It carried a total prize money of $2 million, meaning Kim took home a check $551,000. For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Fikile Lungwati.
Business news on Channel Africa. The African perspective. Get the news, music, and lifestyle of Africa on Channel Africa. The African perspective. Africa in Business. Africa in Business delivers key insights and real-time updates on Africa's growing markets with Tami Ngubeni. The African perspective on Channel Africa.
Channel Africa. It is exactly 4:40 Central African time. Still coming up in this part of the hour, this side of the clock rather, a look at our F&B slot, the week's markets. with senior economist from FNB, Siphamandla Mkhwanazi. We'll be looking at the busy week ahead, the announcement by the South African Reserve Bank as far as interest rates are concerned, and also the leading business cycle indicator and what we are expecting regarding that. We'll also take a look at the third quarter FNB Burr Consumer Confidence Index, and also a summit that's taking place in Dubai with the Standard Bank Group and South African state-owned companies. But before that, the United States and South Africa are now engaged in text-based negotiations on a future bilateral trade deal. The Minister of Trade, Industry and Competition, Parks Tau, says significant progress on the way forward has now been made. Ahead of joining the South African delegation for this week's UN General Assembly, Tau spent a number of days in Washington, D.C., meeting with the U.S. Trade Representative and key members of Congress. Now, the minister indicated that part of the talks sought to reduce the high 30% duty that was imposed on South African exports and the future of the African Growth and Opportunity Act, which is due to expire at the end of September. Sherwin Bryce Peace interviewed the Minister Tau, and filed this report.
After presenting the US with a framework trade proposal in May and then a revised proposal in August, movement towards the finalization of a bilateral trade agreement remains painstaking, but with some progress.
Our teams have been engaging, at least at the level of the text now, the actual document. There were discussions on Tuesday and Wednesday, quite intense discussions between the team. By the time we received the report jointly with the U.S. Trade Representative, there were indications that we were making significant progress in terms of the discussions and the way forward. And what's the way forward, you would ask? The U.S. will give us a revised text on the basis of the comments and questions over the past week. We anticipate that would be given to us early in the next week. It would give us about 2 weeks to consider, to consult stakeholders, sister departments, go to cabinet, get a mandate, and be able to respond. And from there, we'd be able to then get into the details of the negotiations.
Minister Tau would not be drawn on specifics due to the sensitive stage of the talks.
I won't get into the granular detail except to say that in our discussions, we're looking at matters related to trade and tariffs and what possible considerations there could be with regards to trade and tariffs. What products are we talking about? What products does the U.S. wish to sell into the South African market? What the tariff conditions are? How you create parity that they are seeking in terms of other markets that they would be competing with, but also how you get South African products into the U.S. and what work is being done. So the trade and tariffs issues are ongoing, and there's still some discussions to be had there.
The minister indicated that areas of potential U.S. investment into South Africa were also discussed, including critical minerals, unlocking gas and helium production, while we pressed him on whether geopolitical disagreements and U.S. concerns about the country's BEE laws were a factor in these negotiations.
Well, it was raised in the initial parts of the discussions, but in the past week it's not an issue that was put on the table. It doesn't mean that it's not going to come up. We're not suggesting that it wouldn't. But I'm encouraged by the fact that we are now in discussion. We're now at a point where we're looking at documents, at text, at proposals, and it's a text-based negotiations. And we would be able to present our side of the story. And of course, the U.S. would engage us. Negotiations in their very nature are not easy engagements. So we do anticipate that these would be difficult negotiations, as should be expected. But I think the fact that we're at a point of discussion, and I think on both sides there's a commitment to ensure that we're able to make progress.
On AGOA that lapses at the end of the month?
We have raised the issue of AGOA. The general sentiment is that there is appetite to renew AGOA, but it's running against critical timelines. It ends at the end of September. Can it be tagged to a different bill is a question that the U.S. congressmen and women have been asking, and they are considering that and different options about if it does expire, how to renew it as quickly as possible. So it is on the cards. The detail of how it would look like is something that we'd have to engage with at the point that the bill is being presented. But at this point, there is an indication that there's broader appetite to renew AGOA.
The South African delegation, led by President Ramaphosa, is expected to engage later this week on the margins of the UNGA in bilateral discussions with leading US companies seeking to invest in South Africa and a trade and investment executive dialogue co-hosted by the US Chamber of Commerce. I'm Sherwin Ricepeas in New York.
Africa in Business on Channel Africa.
It is exactly 4:46 Central African time as we focus now on the Standard Bank Group. They're hosting the South African State-Owned Companies Investment Collaboration Summit from today until the 24th of September 2025. And they're hosting the summit at the Waldorf Astoria in Dubai International Financial Center. The summit is a key platform designed to connect South African SOCs with leading Gulf region investors, sovereign wealth funds and corporates to accelerate infrastructure development as well as trade between Africa and the Middle East. Over 100 senior representatives, including South Africa's state-owned companies, leaders, government officials, as well as Gulf-based investors, are attending the summit. To discuss this further, we have on the line Zen Dlamini, Executive Head for Infrastructure and Public Sector at Standard Bank. A very good afternoon to you. Welcome to Africa in Business.
Greetings, Tammy, and greetings to the listeners. It's great to join you today.
Great to have you with us. I was just talking to my colleagues and to our listeners a little bit earlier on that I'm really quite interested as to why Dubai as the destination for this investment collaboration summit.
Okay, Dubai, I've got so many reasons. Dubai is a strategic geographic location. And just thinking about all the sovereign wealth funds that they boast, and obviously much closer to the Middle East, and also a gateway, if you choose, to the Middle East, to Asia, and Europe. DXB, the airport, the international airport itself, it flies to over 200 destinations, and it is always a buzz. I was saying to the team when we landed midnight yesterday, it was just a buzz. You'd swear that it's like just a normal hour, just because of how interconnected Dubai is. And the ease of doing business, multicultural population, but most importantly is as Standard Bank, we opened our offices in Dubai in 1997, which was a rep office initially, but now it's grown into a fully fledged corporate investment banking full suite. As things stand, from 1997 to 2025, we are fully fledged in Dubai.
And why the interest in the Middle East?
It's the next. The Middle East is the next. We're looking at the pool of capitals. As you understand, traditionally we've been going to Europe, we've been going to the US. When we raise capital, we do like your bond issuances. We'd go to the Reg S markets, and we'd go to the 144As of Americas, and those are known markets. But we looked at the Middle East, and I always say to Sim and the bosses, I'm like, my third eye tells me, let's go to the Middle East. Let's go to I always say I've got a third eye. So it's my third eye. Let's go there. But you look at the pools of capital and the depth and some of the transactions that we've concluded since we started this conference, it actually tells you that there is a huge interest from the Middle East in Africa, and Africa is open for opportunities, and that's really why we're looking at the Middle East, because of the pools of capital, and we're wanting to create that bridge to say that there is capital out there. It's not just limited to perhaps Asia or Americas or Europe. So yes, I think that's the biggest interest. And then also some collaboration, and we're looking at the technology itself and how open the Middle East is. And I think you see some appetite, quite serious appetite, you know, in Africa from the Middle East, as opposed to what we were seeing from China, for instance, or from the West previously.
And let's talk about the summit for a moment. Tell us more about what you hope to achieve from the summit and how you hope and how it will, in fact, accelerate infrastructure development and trade between the two continents.
Okay, so let me take a step back and talk about the summit. When we had our first installment of the SA-SOC summit, we were talking about South Africa, selling South Africa, you know, to say that, yes, we are open for business, but we were experiencing a lot of challenges at the time. So it was really around convincing the markets out there to say that, yes, this is a country or the continent that promises so much, and we've got so many opportunities in the pipeline. It was really around the pipeline and chasing these dreams. And for now, we reflect on the past 2 years. Yes, if you choose 2 years, and then we're looking at this particular installment, quite excited. I mean, to be here this year, just in 2025, because we've moved from talking about the pipeline or talking about the dreams, or we're saying that, yes, we are open for business. We are talking about what is happening now. And I'm quite excited about the fact that some of the initiatives that started in 2020 are materializing. You know, you talk about the reforms, the structural reforms that we were really talking about previously, but they had not taken any effect at all. So when we spoke about the government reforms, we were saying that these are the things that you'll be seeing in the next 2 to 3 years. But now when you talk about the structural reforms, we've got specific cases. You've got a case in point that we talk about. I can talk to you about.
Unfortunately, time not on our side now, Zen. But it really sounds like an amazing, summit that you're hosting there. And as you're saying, the appetite is there. And it's always very encouraging when you are able to see what you discussed before, which were just plans actually now being implemented. So we thank you so much for your time and joining us, and wishing you all the best for the summit.
Thank you so much, Tammy. And yes, we're quite excited to be here.
All the best. Thank you so much. That's Zen Dlamini.
Okay, bye.
Have a good one. Bye-bye. She's the Executive Head for Infrastructure and Public Sector at Standard Bank. She brings us to exactly 4:53.
Hi there. Do you want to elevate your business and give it a voice in South Africa and Africa as a whole? Well, in that case, let Channel Africa make this a possibility. Channel Africa is willing to advertise your business for as little as 30,000 rands or $1,719.18. To get access to these great rates, send all requests to mukwena@SABC. That's MOKOENATA@SABC. Channel Africa, the African perspective. African enterprise meets global opportunity. Africa in business on Channel Africa.
Now, in this week's market slot with First National Bank, we're joined on the line by Phamandla Mkhwanazi, FNB Senior Economist. Good to have you with us. Happy Monday to you, Phamandla.
Happy Monday to you too, Tammy. Good evening to your listeners.
Well, I'm sure you'll agree with me. I mean, it's only Monday, but it's not as busy of a week as we saw last week with so many releases and announcements being made. But if we look back at the week that was, what did you make of the South African Reserve Bank leaving the interest rate unchanged? And what would you say is the outlook?
Right. No, thank you for having me on your show. Look, there weren't too many surprises coming from the MPC statement. The broad expectation was that they were going to keep interest rates unchanged. The reason being that, in the second half of the year and towards the start of next year, we expect inflation to continue on that rising trend. We think that they are going to stay put for now until inflation makes a turning point at the beginning of next year. There's convincing evidence that it is now headed back to that preferred 3% level. So until then, I think we're going to see an MPC that is just going to be evidence-based in their decision making.
And looking at the week that's coming now, we are going to have the leading business cycle indicator. What exactly does it tell us, and what are we expecting?
Sure. So the leading business indicator, it comprises of about seven components put together. They all tell us about the expected economic outcomes in the next 6 to 8 months. Now, in the recent data print, we did see a slight recovery of 0.4% month on month, suggesting that there is positive momentum we should expect positive momentum in the economy down in 6 to 8 months. However, looking at the quantum itself, yes, the direction is a positive one, but the quantum is still pretty slow. Pretty low at this stage, suggesting that, as much as we're going to see an improvement in economic activity, that improvement is going to be relatively small.
And the third quarter FNB Burr Consumer Confidence Index, that will be released as well. Expectations on that front?
Yeah. So at the start of the year, we mentioned that economic growth this year is going to be consumer driven. So it's important that, we assess how consumers are feeling on the ground and whether they are, they are willing to engage in economic activity. We did see some improvement in the previous quarter, and that was, during the time when, there was that, back and forth around the budget, the passing of the budget, the removal of VAT, SA's relations with the US. So we expect that we should see some continued improvement, but not shooting out the light, still remaining in that negative territory.
And just before I let you go, we are looking forward to Thursday. We will have the producer inflation. What are expectations regarding that?
Right. So what is going to be key this time around in the PPI, Tammy, is that food component. You know that consumers have been grappling with high, especially meat prices. In the previous month, it did show a slight deceleration in meat prices, which should be good news for consumers, because as producers reduce their prices, consumers should also expect that retailers are going to pass on those savings to consumers. So that food component is going to be key for us.
And thank you so much, Siphamandla Mkhwanazi, for that roundup of the week that was and the week that is to come. You have yourself a great one until we chat again next week.
Until you chat again, thank you, bye.
Thank you. That's Siphamandla Mkhwanazi, FNB Senior Economist. He leads us to exactly 4:58, and we say bonjour, bonjour, bonjour.
Bonjour,
to
Tammy.
you, jolie Joelle.
Bonjour, merci Tammy. Bonjour à tous les auditeurs de Channel Africa. Merci de rester connectés parce que sur Vue d'Afrique, il s'agira du procès historique. L'ex-vice-président sud-soudanais Riek Machar a comparu. Et nous parlerons aussi des élections présidentielles au Malawi, mais aussi du président sud-africain qui est à New York pour une diplomatie de haut vol à l'ONU. C'est tout à l'heure sur Vue d'Afrique. Merci de rester connecté. Merci Tammy.
Merci beaucoup indeed. Restez connectés for Vue d'Afrique, which starts in just a moment. It's gone exactly 1 minute to 5 p.m. and that's how we come to the end of our time together. This has been Africa in Business. Thank you to our amazing team, both behind the mic and behind the desks. From myself, Tammy Ngubeni, and the entire Africa in Business team, give yourself a splendid evening further. Until demain.